'Tis the season to give to others, but this year, many donors may be in for a surprise. There's a major change to the way charitable giving will affect our taxes. Local financial professional Mike Kojonen, owner of Principal Preservation Services, is here to discuss those changes. And Mike, as always, thank you for being here.
Thanks for having me again.
So what's different when it comes to charitable giving this time of year?
Well, everybody likes that tax deduction when you give to the charities, but things are different because of tax reform that went into place this year. And you only get that tax deduction if you are itemizing your taxes. So last year, about 46.5 million people itemized their taxes. This year, it's over a 60% drop to about 18 million. So with that standard deduction going up for married couples all the way up to $24,000, and even more if you're over 65, it doesn't bode well for people to, to itemize anymore and give to that charity. So go ahead. For those millions of people who are no longer going to be itemizing, is there still a way that they can get a tax benefit? Yeah, there's a couple things, a couple strategies you can do. One strategy is called bunching, and I have a client currently doing that. So what they're doing is putting charities, like doubling it up in a year. So charities, what you would do over a 2-year period, do it in 1 year, so you can itemize that year. Then the next year you don't itemize. You take that standard deduction and you just bunch it. Now it doesn't work for everybody. It depends on how much you're giving to charities as well. It's usually for larger donations. Another one is donor advised funds. So you can donate mutual funds, stocks, even real estate into it, these advised funds. It grows tax-free. You get immediate tax deduction, but you grant that money to charities. It's a little bit more confusing. It's become more popular the last few years. About almost 10% of the donations last year came from donor advised funds. So people are going this digital route, if you will, with how they're giving back to people. Yeah, they're just going to be more savvy with that. I think the most important one, and one I use a lot for my practice, is the next one is RMDs, required minimum distribution. When you're 70 and a half, the IRS is requiring you, whether you want to or not, take money out of your qualified plans and start paying taxes on that money. But there's another tool called a QCD, Qualified Charitable Distribution. You can have that money go directly, instead of taking that money out. Let's just say, for example, you give $10,000 to a charity every year, and your RMDs are $10,000. If you paid your taxes, just a standard tax bracket, state and federal, you might only keep 75% of that, $7,500, because you had to pay your taxes and then donate to the charity. Well, you can have that $10,000 go directly to the charity, and then they get it tax-free, and you don't pay taxes on that as well. It's a great tool, especially for those in retirement, to actually get some tax benefits usually when they have their house paid off and they don't have the standard deduction, they have to take the standard deduction. It's not worth them to itemize, so you can get some benefits. But there's some key rules on that. Maximum donation is $100,000 a year, which most people
they might not have that, especially in retirement, to be giving away.
Yeah, but it does not work with employer-sponsored plans. So you can't have it come out of your 401k or 403b. It has to come from an IRA. So that's why it's a big advantage to have IRAs and roll those over to IRAs when you can. And also, you can have that check come to your mail. It has to go directly to that charity. So even if they inadvertently send you that check, you can't even bring it to that charity. It's a taxable event, then. It has to go directly to that charity. So a couple tips so you can get some extra deductions. Are there a few extra tips when it comes to that charitable giving people should think about, especially as we're closing in on the change of the year? Yeah, just do your research. I think it's important to find a charity that you're just passionate about, one that you can get underneath their mission and something you feel that you're involved. But do your research and find out how much money is actually going to that charity. Some of these charities, 90% goes to administrative costs. It doesn't really go to the need that you really passionate about. So do your research on that. And right now there's a lot of charities are in need, because with tax reform, I think they're concerned that people aren't going to give because they're not going to see that benefit. So whether you get that that tax deduction or not, put them on the list if you can to give this year. Last year we set a record. Over $410 billion was given to charities last year. Wow. We're hoping we can exceed that this year as well. And hoping that these changes in tax reform don't scare people from making those donations. I hope not. They could definitely use it. Absolutely. Thank you so much for being here again, Mike.